What's up, guys? How are you doing today? We should be already streaming, I guess. But per usual, my live stream seems to be offline. But I'm streaming. Can you guys hear me or see me? There you go. Yeah, the same problem. Same old situation. I'm live. Welcome back, guys. Welcome back to another live stream. What a day it was. Did you guys kill it? Buying puts? What a day. Oh boy. Let me tell you guys, welcome back. Again, I have been trading for almost 6 years, and I have seen so far a lot of gap and craps type of situations, right? Today's gap and crap was top 5, no problem. Unbelievable. So yesterday, once the earnings report of NVIDIA came out, everyone was bullish. Oh, NVIDIA killed it, and they did kill it. NVIDIA posted a blockbuster, an unbelievable earnings report. Everyone was bullish. And guess what? They pulled the rug out, and even NVIDIA ended up giving up the gains that were obtained yesterday after hours. So today was an epic day, and we did what we had to do, guys. So I was pretty much narrating the trading session for you. Let me see if I have here my Discord. So here you can see the posts. I was calling bulls strikes, as I always tell you, and I ended up making good money today, guys, buying puts. Let me show you some screenshots. This was the last put that I told you guys about. Over here, I ended up making $204, $123, $103. All of these trades were open today, were open and closed today, and I simply did what I told you guys, or what I was suggesting to you on my Discord channel. I was waiting for the bears, for sellers, to break important areas of support to the downside, and that was it. I was buying puts. And take a look. It was a very successful day for me, and I guess that for most of you guys. So bloodbath across the board. The Russell 2000 went down 1.27%. The NASDAQ went down 1.87%. The Dow Jones went down 1.08%. And the S&P 500 went down 1.35%. If you have any questions about the action hold tomorrow, remember that we have Papa Jerome Powell tomorrow speaking at 10:05. I think that 10 a.m. or 10:05. 10 a.m. pretty much from Jackson Hole. And if you guys want me to go over any given stocks, please drop a comment down below and let me know what stocks you want me to break down from a technical standpoint. So a brutal bloodbath across the board. And if we take a look at the sectors of the markets, take a look, guys. No metals today for any of the 11 sectors that trade inside the S&P 500. All of them closed in negative territory. And take a look at this, guys. I have been telling you, and I have been warning you about this situation. Everyone was talking about a brand new bull market since, I don't know, like 3 months ago and stuff like that. And we were actually in a new technical bull market. Clear uptrend in all of the time frames, in the case of the SPY. But I was telling you that the quote-unquote new bull market was actually a bullshit market, because it was a bull market related to 7 stocks that did the heavy lifting throughout this year and to this date. And take a look at what happens when the sectors in which the 7 magnificents trading, take a look at what happened when these sectors go down. So today the worst performing sectors were communication services. This sector got absolutely killed today. It goes down 1.92%. When we talk about communication services, we're talking about Google about none other than Google and Meta. Netflix is also in communication services. Then we have consumer discretionary. What stocks are we talking about when we talk about consumer discretionary? We're talking about Amazon and Tesla. And when it comes to technology, XLK, we are talking about none other than Apple and Microsoft. So if these three sectors go down, that's it. The markets cannot go anywhere, and the markets are unable to pull up a green day. So a very nasty day as well when it comes to the sectors. And let's see what happens tomorrow, guys. Powell is very likely to be able to move the tape. You guys are asking me about AMD, Starbucks, Apple. Okay, so here's the deal, guys. Don't pay much attention to the futures tonight and tomorrow pre-market, and please avoid trading before Powell speaks. Okay, the markets are going to be waiting to see if he happens to sound either dovish or hawkish. If you ask me, I'm thinking that we are not going to be getting any surprises from Powell. So he's gonna be saying the same stuff, that the same bullshit that he always says, that they are still going to be data dependent, that inflation is still too high, and that inflation has come down significantly, but that there is still a ground to cover when it comes to bringing inflation down to 2%, and that they are still going to be data dependent. What can Powell says tomorrow that could, let's say, that could damage, that could, let's say, put a lot of downwards pressure on the markets? If he happens to, let's say, imply that they are not done hiking rates and that we might see maybe one or two more rate hikes, that could be putting further downwards pressure over the markets. But I'm thinking, and taking into account that we have already seen some sort of an acceptable retracement in the case of the S&P. Let me see what is going on over here. My TD Ameritrade. What is going on with Thinkorswim? There you go. Okay, sorry about that. Okay. So far, guys, to this date, we have seen a 5% retracement in the SPY. Nothing crazy. For us, to be able to talk about a deep correction or a, let's say, regular correction, we need to see the SPY dropping 10%. So we cannot even talk about a technical correction in the markets so far. What we have seen is a retracement, a pullback inside a major uptrend when it comes to major timeframes. So we have only seen a 5% retracement. The markets have gone up a lot year to date. So nothing crazy so far. This could get uglier, but in my opinion, I could be mistaken, obviously, unless Powell says something unexpected tomorrow, which I don't think is going to be the case. I think that Powell is going to say the same stuff that he has been saying throughout this year, and that taking into account that the markets have already pulled back 5%. Today we saw a massive red day across the board. I'm leaning towards bullish into Powell tomorrow at 10 a.m. Eastern Standard Time, but that doesn't imply that we are going to go all in calls. As soon as the trading session opens, we need to wait until Powell comes out and we can confirm that what he's saying is being liked by the market. And on top of that, regardless of whatever Powell... Oh, sorry, guys. Let me take a bit of a sip of water over here. You guys know that I do live stream for the guys of my Patreon throughout the whole training session. I have been streaming so far for 7 hours and a half or something like that. I'm a bit tired here. So, regardless of whatever Powell says, what matters the most is the price action. Okay, we need to know the areas of support and resistance, or the areas of interest that we need to keep an eye on in terms of support and resistance. And you guys know that I am going to be calling balls and strikes in my channel. I am going to be letting you guys know the areas of interest that you need to monitor tomorrow. So, in my opinion, I'm leaning bullish towards Powell. Maybe he says something that the markets don't like, and we see further downwards pressure. But I think that we are heading into this Jackson Hole meeting with a 5% retracement. So far, today the day was absolutely nasty. And if Powell says the same stuff that he has been saying, keep in mind that with the same stuff that Powell has been talking about, the SPY went up to almost $461. So I'm kind of leaning bullish into tomorrow's Jackson Hole meeting. When it comes to technicals, guys, take a look at this. I'm going to pull up here a daily chart. So in major time frames, this is a clear uptrend. We have seen a respectable pullback, but take a look. We have an upward sloping 200-day moving average and also an upward sloping 100-day moving average. Nothing to complain about in major time frames perspective, okay, or wise. However, if we pull up a minor time frame, here is when the story starts to show a different face. Take a look. This, let's say, this pink line that you guys can see over here is the 20-day moving average. And take a look at how, guys, the bulls haven't been able to take out or to burst above this downward sloping 20-day moving average on 3 occasions. And today wasn't the exception to the rule. So take a look. On August 4th, they failed right at the 20-day moving average. Then on August 10th, they failed once again at this 20-day moving average. And today, guess what happened pre-market? They made a test of this downward sloping 20-day moving average, and they failed once again. And after they failed at this level, this was pretty much a collapse. So very important level in technical terms. If we happen to see the markets, let's say, bouncing back up, whenever we see a new test of the 20-day moving average, this is going to be showtime for the bulls for sure. However, if the decline continues, which could be the case, guys, I don't have a crystal ball. Maybe Powell tomorrow, I don't know, comes out extremely hawkish because he's concerned about inflation, because the CPI is going to tick back up, or I don't know, whatever it is. Again, I am leaning bullish towards Powell tomorrow, but I don't have a crystal ball. So what does it mean in practical terms? I am going to be waiting for the price action to let me know what I have to do. That's it, regardless of whatever Powell says. Long story short. However, if this decline continues, we have 2 very important spots support-wise that could be producing a, let's say, a bona fide bounce situation. $433. Put this down on a sticky note, guys. This is the low that was made back on August 18. We can expect a very, let's say, sizable and good old bull bear battle near $433. And mind you, if this support of $433 happens to be broken to the downside, guess what? We have an upward sloping 100-day moving average, or we are going to have an upward sloping 100-day moving average just around the corner at $430. And on top of that, $430 is a fat number, and fat numbers are very, but very important. So to the downside, and again, put this down on a sticky note, $433 could be potentially producing a bounce in the northern direction. And if this support happens to be broken to the downside, then we have $430. Very important spots to the downside. However, on the flip side, what happens if tomorrow we see a rescue operation, a turnaround Friday? And maybe I am right, because again, I am leaning bullish towards Powell tomorrow. I don't think that he's going to come out like a hawk. So the bulls need to burst above $438.50. $438.50 happens to coincide with this with this white line, which happens to be the 5-day moving average. I have been telling you guys And I have told you guys on multiple occasions that I use the 5-day moving average in order to determine who is in charge in minor time frames. Over here, you guys can see a 1 hour chart. This is a minor time frame. So for me, in order to go long the markets tomorrow, for me, in order to grab calls of either the SPY or the Triple Q, I need to see the bulls consolidating and closing candles above $438.50. And if we happen to see a massive rally tomorrow, because I don't know, Powell says that they are done and that a soft landing is coming up and that everything is fine with the economy, and I don't know, whatever. If the price action, let us see, or if the price action brings the bull up to this 20-day moving average, which happens to be downward sloping, that implies that this is a very important spot resistance-wise. So if we happen to see a massive rally tomorrow up to the vicinity of $445, watch out, because that is going to be prime time for the burst. So, do you have any questions about the SPY? This was a very detailed explanation over here. Yeah, I don't know about that. Due to the weather on the Eastern Hemisphere, the joint stock election doesn't have a happy face. You're gonna have to finger the button in order to pick up the apples. So, Joshua Gilson, who else is over there? Michael, Jay Benson, Preston Hertz, Gilson, Gene Vols, Nooney. Okay, guys, so what stocks do you guys want me to break down from a technical standpoint? When it is 7 p.m. Eastern Standard Time. And again, if you happen to notice, some mistakes here and there, my apologies, but I have been streaming so far for something like 8 hours, so I'm very tired, guys. I am making here an extra effort in order to go live for you. So let me see, what requests do I have over here? Let me see. Apple. Let's go ahead and take a look at Apple. It got killed today. I mean, everything got killed today, guys. It was a nasty day when it comes to the breadth. And in the case of Apple, we have a similar case. Wow, Apple broke. I didn't notice this, guys. This is a major win for the bears. So Apple closed today the trading session below the 100-day moving average. How about that, huh? Okay. In a major time frame, such as the 4-hour chart, we still have an uptrend. Arguably, this downtrend is about to be reversed if the bulls keep closing candles below this blue line, this 100-day moving average, so below $179. But we still have an upward sloping 200-day moving average. This chart isn't looking good at all, guys. So we have a downward sloping 5-day moving average. And take a look at, just like in the case of the SPY, where did the bulls of Apple failed at today, guys? Take a look at this pink line, the 20-day moving average. Take a look at this. Right over there, $182. So they found support near $171. Apple bounced back up, and they filled this gap up to this 20-day moving average near $182, and that's it. Sellers showed up, and that was it. And this was a very nasty close today, guys, below the 100-day moving average and below the 5-day moving average. So in my opinion, let me zoom out here. In the case of Apple, this is going to be a very important spot in tomorrow's trading session. And you guys know what the old saying says, wherever Apple goes, so does the market. Okay, $177, guys, happens to coincide with the 5-day moving average. Remember, I used the 5-day moving average in order to determine who is in charge of minor time frames. So $177 coincides with the 5-day moving average, and also with a previous support back from early June, and also with a previous resistance back from mid-May. Very important spot. So if we happen to see Apple holding $177 as support, that could be signaling that the bulls are starting to gather momentum in order to maybe fill this gap up to this downward sloping 20-day moving average, which again, whenever it happens to be tested again, is going to be acting as a huge resistance. So from, let's say that we can take this trade the way that I'm telling you, from $177 up to this 20-day moving average, up to $181.50. This would be a 2.50% profit trade. However, what about the flip side? What about shorting Apple? If the bulls of Apple failed at bursting above $177, so if they are unable to take out this 5-day moving average, we have this gap that is open. This gap is open pretty much down to $171, which is a spot in which they found support that back on August 17. So this is pretty much the plan on Apple. Let me take a look at the market structure of good old Apple. Let me see what what the demand and the supply is looking like over here. So take a look, guys. Remember, this is a tool that I use in order to determine what the demand and the supply of any stock is looking like. In the case of Apple, and yes, today we had a terrible day. We have a rise in demand, but the supply is also rising and about to burst above the average. When I talk about the average, I am talking about this dotted line that you guys can see over here. So this is the average of the supply. So this implies that despite the fact that buyers have been showing up, because we saw a very decent bounce in the case of Apple from $171 up to this 20-day moving average up to $181. This was a bounce of almost 6%. So buyers showed up, but from a market structure standpoint, they couldn't outnumber sellers. And this is the reason why Apple fell today right at this 20-day moving average. So these are the scenarios that I think might be playing out tomorrow in the case of Apple. And obviously, Apple is going to be moving the markets. By the way, guys, keep a close watch on these two indicators. I told you guys last week about TNX, the 10-year Treasury yield. This indicator is inversely correlated to the indices and to the markets in general terms. Okay, so I am going to pull up here a 3-year chart and take a look at what is going on as of now. So TNX, or the 10-year Treasury yield, reached a high back on October of last year, pretty much when the market as a whole bottomed out last year. So what happened? TNX found resistance at 4.37%, and it pretty much collapsed. Okay, from this level, we saw a sizable retracement down to 3.16%. Take a look at what is going on as of now. Okay, look, the bulls of TNX are making a test of a former resistance. So if some sort of quote-unquote double top happens to unfold here, we don't know if this is going to be a double top or not, because the formation, the technical formation would have to unfold completely. But let's say that we happen to see a retracement from 4.34% down to this previous high at around 4%. This would be, let's say, delivering a mechanical relief for tech-oriented stocks and higher multiple stocks. So keep an eye on the 10-year Treasury yield, TNX. If, on the flip side, TNX, or the 10-year Treasury yield, happens to burst above 4.35%-ish, and if it keeps going higher, this is very bad news for the triple Qs, for the Nasdaq 100, the SPY, Apple, Microsoft, and you know the drill. So you need to start to get familiar with the mechanical aspects of the markets. Okay, the 10-year Treasury yield at these levels puts downwards pressure over the valuations of tech-oriented stocks and higher multiple stocks, and the triple Qs and the Googles of the world and the Amazons of the world and stuff like that. So this is a mechanical factor that you need to start to monitor on a daily basis if you're actively trading these markets. Another mechanical factor that you need to keep an eye on is the dollar, the US dollar, guys. The Dixie, if I happen to be able to pull it up here. Let me see. Take a look at the Dixie. This is the US dollar. let me tell you a bit more about the US dollar. So 70%, guys, of the revenue, that 60%, or no, let me rephrase that. I am saying it the wrong way. Okay, 60% of the total revenue of the S&P 500 or the SPY is made abroad. It's made, it's made overseas. So what happens if we happen to have a very strong dollar? That affects in a negative way the valuations of most of the, let's say, market moving stocks, such as Microsoft, such as Apple, such as Tesla, or I don't know, such as Nvidia even, okay? So take a look at what has been going on in the case of the DXY, the US dollar. It has been going on an absolute tear. Over here, we can see an upward sloping 20-day moving average, upward sloping 5-day moving average, and the bulls recently scored a major goal over here because they were able to burst above the 200-day moving average, and they started to consolidate above the 200-day moving average. Some people were saying that we were going to see the DXY sub 100. Didn't happen. It found support at 100, and take a look. It went on an absolute tear. So, also, from a mechanical standpoint, if the DXY happens to consolidate above $104, and if it happens to fill this next gap up to $105, which happens to be a previous, or 105 points, let's just put it that way, which happens to be a previous resistance back from late May, if this gap of only 1 point, guys, happens to be filled, lower we will go. 1,000,000% guaranteed. Okay? So, despite the fact that I am very active on Discord, letting you guys know the areas of interest in the case of the SPY and the QQQ, you need to get familiar with the mechanical aspects of the markets. If you're going to buy calls of the QQQ or the SPY, whereas the DXY is going higher along with the TNX, you are very likely to be mistaken on that trade. And on the flip side, if you are shorting the market with these two indicators going higher, then go ahead. That's a green flag for you guys to take that trade. Can I get the link to the Discord? Want to become fluent in Spanish? It says Joshua. I think that it is on the description of this video. I think on the description box. Sure. If you want to learn Spanish, yeah, we are here. We are available in order to help you. Absolutely. Okay. Now I'm being asked about Boeing. We got bad news about Boeing, guys. Today, the flying coffin. Did you guys know that some people call Boeing the flying coffin? I'm not saying that. I'll do Google. Absolutely. No worries, Alice. I'll do it. Sure. So we got bad news today, guys, because we have some issues once again with the 737 MAX. And Boeing went down today, 5%, and it closed the trading session at $217.30. And this actually affected in a very negative way the Dow Jones. This is a very heavy stock inside the Dow. So in major time frames, we can still call this an uptrend, because of the fact that we have an upward sloping 200-day moving average and an upward sloping 100-day moving average. I think that if I pull up a daily chart, yeah, this is an uptrend, guys. Yeah, it qualifies as an uptrend. However, in minor time frames, take a look. Sellers are starting to take control of Boeing. They lost the 20-day moving average, and they also lost this 5-day moving average. So we have a potential area of interest coming up for a bounce, $214. $214 happens to coincide with this upward sloping 100-day moving average. Remember, guys, that the slope of any moving average is very important. If a moving average is upward sloping and it is being tested as support, it is more likely to act as support, or is, let's say, maybe very likely to act as support. Whereas, if we have a moving average that is downward sloping and it is acting as resistance, it is very likely to be a very tough spot for the bulls. So the slope of the moving averages is extremely, but extremely important. So circling back to the technical analysis of Boeing, $214 is an area of interest. Mostly if we happen to see tomorrow a bounce situation in the markets or a turnaround situation in the markets. Why? Because this upward sloping 100-day moving average happens to coincide with a previous resistance back from early June, also back from April, also back from early March, and also back from early January. Big level here for Boeing. I would expect a good bear bull battle at around $214. Let's say that we take a trade over here, and remember, guys, because this would qualify as buying the dip. Don't buy the dip. Buy strength after the dip. So if I were to take a trade on Boeing over here with this technical chart, I would wait for the bulls to consolidate above $214. So I would wait for the bulls in order to confirm that buyers are trying to regain control of Boeing at this upward sloping 100-day moving average. And if I happen to see a bounce, I would take the trade with Boeing reaching, let's say, $216, because from $216 up to the next important gap, up to $223, this would be a 3% profit trade. But I wouldn't be guessing the bottom here, because some traders, guys, and this depends on your style, right? Some traders guess that a certain level is going to act as support. So maybe on Discord tomorrow you see someone saying, hey, Boeing is about to hit the 100-day moving average at $213. If it happens to get down to that level, I am going to grab calls. Don't do that, because as you don't know if a support is going to act as such until after the fact. So Boeing drops down to $214. It finds support. It bounces back up. I don't have to take the trade right at the support. I don't need to take this trade right at $214. I can take the trade at $215 once the buyers regain control. So I'm going to let the buyers do the heavy lifting, the heavy duty, instead of me. So, it bounces from $214, so buyers regain control, or let's say that outnumber sellers at this area. Boeing bounces back up. I entered at $215. Thank you very much, buyers, for doing the heavy lifting for me. And I close the trade at $221. As I just told you, this would be $220, $221. This would be a 3% profit trade. So remember, guys, a support is a support after the fact. Don't buy the dip. Buy strength after the dip. Okay, so this would be the trade that I would be taking on Boeing. Let me take a look at the market structure. But mind you, guys, the market structure of Boeing doesn't reflect the price action that we saw today, and it got killed on the bad news that I told you about. But take a look, guys. Very poor market structure. Remember, on top of this chart, we have the demand, so buyers. And at the bottom, we have the supply, sellers. Take a look at what is going on with the demand. It is collapsing. Buyers are nowhere to be found in the case of Boeing. And on the flip side, take a look at the supply. It is going higher, and it is about to burst above average. So we have a very poor market structure. On the flip side, because I just told you, I already told you about the let's say the bull trade over here, the bullish trade over here. If Boeing breaks this 100-day moving average, it has an appointment with lower prices. Maybe this upward sloping 200-day moving average at around $205 approximately. Would you please explain why many people lost at profit even in the money calls or puts? In the case of NVIDIA, you mean? So please forgive me if you are. Today, the IV crush on NVIDIA was brutal, guys. I had people on my Discord that got calls yesterday, and they could not even break even when the trading session opened because the implied volatility was too high. So in my case, I have told you this on multiple occasions, and I'm going to go over Google right away. Guys, I rarely ever There could be an exception to the rule here and there. I rarely ever trade options if the implied volatility is above 70%. If the implied volatility is above 70%, you need a monster move to either the upside or the downside, depending on the fact, depending on the trade. Whether you grab calls or puts, but you need a monster move. So I simply don't. I try to avoid trading options when the implied. Let me rephrase that. I try to avoid being a buyer of options, either calls or puts, when the implied volatility is above 70%. If I am going to be a seller, if I am going to be selling a put or a call option, that's a whole different story, obviously. The higher the implied volatility, the better, obviously. So in the case of NVIDIA, I don't know if you're talking about NVIDIA, the IV crush today was brutal. So everyone got killed. Put holders and call holders. It was really amazing what happened today in the case of NVIDIA. Google goes down today 2%, and it closed the trading session at $130.42. So in the case of Google, we don't see a lot of damage over here, still in an uptrend. Upward sloping 200-day moving average, upward sloping 100-day moving average, and the bulls are still holding a semi-ascending 5-day moving average. So this chart looks way better relative to most of the charts that we have gone over today. Keep an eye on this level, $130. Again, 5-day moving average. If we happen to see tomorrow a relief rally or a turnaround Friday, if the bulls can consolidate above this 5-day moving average, so above $130, we have a gap up to $132. If we take this trade the way that I am describing it over here, this would be a 2% profit trade. Nothing to sneeze at, but it would be a good trade over here. Let me take and on the flip side, guys, if we want to talk about the short trade, losing this 5-day moving average, this is an important support in minor time frames. This could put further downwards pressure over Google, and we have a gap, an unfilled gap, arguably, here to the downside, down to $127, which is a previous support back from mid-August. There you go. Let me take a look at the market structure of Google McGoogle. Let me see, what do I have here? Let me see. Well, let's take another sip of Sprite. And what is going on? Not a good looking demand and supply, guys. Why? Because the demand is flat. So no more buyers are coming over, which is not a good sign for a stock in order to rise. We need more buyers than sellers. And take a look at sellers, guys, the supply. The supply is going higher. It is above the demand, and it already burst above the average. So this market structure suggests to me that this 5-day moving average might not actually hold as support. So maybe Google has an appointment with lower prices. $127 would be a target to the downside. And NVIDIA, that's what happened with NVIDIA. Guys, avoid gambling on earnings. It isn't worth it. I have been trading for almost 6 years, and believe me, all of the people that make a living from this living, from a professional standpoint, they don't gamble on earnings. Do you know what I do on earnings? I wait for the report in order to come out. And if we happen to see a good report, and if the stock hasn't, let's say, exhausted the expected move, I buy shares. That's what I do. And I do it in a very profitable way, guys. But do not gamble on earnings. It isn't worth it. You will lose more money than the money you will win. 1,000,000% guaranteed. That's gambling. Don't do it. And again, I like playing on earnings, but I do it in a safe way. I wait for the report to come out. If the reaction of the algorithms happens to be positive, and if I notice that the stock hasn't, as I just said, exhausted the expected move, I take the trade with shares. And usually those are quick trades, in and out. And I make a little profit. I don't make a lot of money, obviously, but I am not gambling on earnings. It doesn't make any sense. Alrighty, I did Google. So what else? What other request do I have over here? VFS. Is that a stock? You don't have to tell us your mythical powers. Okay, let me see. Is that a stock, guys? VFS. I'm amazed. No one has asked about Tesi and Nvidia. It was a tough day for the bulls out there, guys. I got a. No, I didn't find any stock with that ticker symbol. I know VFS. Let me see. It was a tough day. If you don't know how to trade the markets, guys, today was a super frustrating day. Super. And I know that many people don't know how to short the markets. So if you don't know how to buy puts and stuff like that, if you don't know how to short the markets, in a day like this, you want to cry. Yeah, because you're losing money by the minute. So this is an IPO. This stock started trading how long ago? On August 15. Guys, I usually do not trade IPOs until they have at least 6 months of trading. Until 6 months have passed since the stock started trading publicly. And why? Well, because we don't have enough technical reference over here. So what can I say? I cannot even use a 100-day moving average, a 200-day moving average. So as of now, the stock is above a semi-ascending 5-day moving average. It seems to be working on some sort of bullish flag pattern over here. But avoid trading stocks that started trading a few days ago, because we don't have enough technical reference in order to base our trade on. So that would be my reading of Vinfast Auto. I didn't know this stock, so this is an IPO. We haven't had a lot of IPOs recently, guys, because of the credit situation. SMCI, can you give me support and resistance? Sure, I will. Let me see. Another stock that got killed today, guys. And again, I guess that most of you were very bullish yesterday when the report of Nvidia came out. Don't make any assumptions. I think that today was a very important learning lesson for a lot of people out there. We don't need to make any assumptions. We have the technical charts, guys. That's all we need. So I'm thinking, guys, that tomorrow we are going to see a turnaround Friday based on Jerome Powell, basically, because lately he sounds bullish. He says stuff that the markets like they are in restrictive territory, that inflation is coming down, that there is a soft landing coming and stuff like that. So I think that Powell is going to say the same thing tomorrow. But I need to be open-minded. I need to have an open mind tomorrow. Why? Because Powell could be hawkish tomorrow. I don't know. So who cares about what Powell says? We have the technical charts. So start to trying to figure out where the markets are going in the next 24 hours or the next 48 hours. Wait for the price action to tell you what you need to do. That's it. In the case of SMCI, this was a tragedy. I mean, so many people trapped over here. By the way, this was a stock that I actually day traded yesterday after the Nvidia report came out. This was what is called a sympathy trade. So the report of Nvidia was positive, the initial reaction of the market was positive, and I was buying shares of SMCI because SMCI is also a semiconductor stock. So in the case of SMCI, take a look, big retracement, guys. So again, in major time frames, this is still an uptrend, upward sloping 200-day moving average, upward sloping 100-day moving average. If I zoom in, take a look, or if I pull up a major time frame, let me pull up here a 1 hour chart. Take a look at where they fell at today, guys. 20-day moving average, 20 daily SMA. So they failed right over there, just like Apple did and the SPY. But the bulls are holding, as of now, this 5-day moving average, guys. Take a look. So this is interesting. Let me pull up here once again the 4 hour chart, and let me zoom in. So again, and if we happen to see a turnaround Friday, tomorrow, and stuff like that, if the bulls can open the trading session above $258 ish, again, which is a level that coincides with this 5-day moving average, we have a first gap up to $268, which happens to be a previous resistance back from early June. And if we happen to see a larger push to the upside, we have another gap up to $283, previous resistance back from early August, and also a previous resistance back from early July. So what if we can take these trades, guys, or this trade? So the first gap from $257 up to $268 will leave us a 3% profit trade, and up to the second gap that I just told you about, $282. This could be an 8% profit trade. And mind you guys, be careful over here, because the bulls are hanging on by a thread on this 5-day moving average. So I'm thinking that if SMCI opens below this 5-day moving average, we could be seeing lower prices down to $233, which is a previous support back from mid-August, or even, why not, a test of this upward sloping 100-day moving average at $216. So this is going to be a stock that I am going to be keeping an eye on tomorrow for sure. Let me take a look at the market structure of SMCI. I showed it the US 100 today. Dustin says, good bro, good job. Let me see. Take a look, guys. Wow. What a poor market structure. Jesus. What ETF did you use, Dustin, in order to short the US 100? Take a look. The demand collapsed. Guys, take a look. This is a mirror of the supply and the demand of a stock. Would you trade a stock, or would you go long a stock that you know for sure that its demand is collapsing? There are no buyers. They are nowhere to be found. Take a look, and take a look at the supply on the flip side. Sellers skyrocketing. I mean, skyrocketing is a bit of an exaggeration, but it's going higher, and it is above the average. So yeah, I mean, SMCI could be a beneficiary if we happen to see a turnaround Friday, tomorrow, but don't touch this stock below $257, at least for a long trade, right? If you want to short it below $257, go ahead. That sounds like a plan. Scalp the 1 minute chart. That says Dustin. Good. So you shorted the US 100 directly, right? You didn't use any instrument or ETF? Nice. Okay, I have micro tragedy, MSTR. Let me see. There you go. Micro tragedy. What is Bitcoin doing, by the way? You guys know that micro tragedy. I say micro tragedy, guys. I mean the actual name of the stock is, or the company for that matter, is MicroStrategy. But you guys know Michael Saylor, such a Bitcoin pumper. So MicroStrategy in my case. And Bitcoin is going lower as well. Guys, you cannot trade MicroStrategy or MSTR if Bitcoin is going lower. And Bitcoin seems to be working on some sort of bearish flag pattern over here on the 4-hour chart. Be careful, guys, because Bitcoin isn't looking good at all. So say that Bitcoin completes, or if this bearish flag pattern happens to unfold and Bitcoin stakes out $25,500, and needless to say, if Bitcoin breaks $24,800 each to the downside, micro tragedy is going lower, guys. Let me see. Yes, take a look. We have an interesting convergence here, guys, of this downward sloping 5-day moving average and the 100-day moving average. So I'm thinking that if MSTR opens the trading session below this upward sloping 100-day moving average, and if it happens, and if the bulls happen to fail at bursting above it, We have lower prices coming, guys. There is a first gap. I mean, there's a gap here. This is a very volatile stock, by the way. There is a very scary gap here down to $278. I wouldn't touch micro tragedy below this 100-day moving average, so below $336 approximately. Yeah, I wouldn't touch it over there. So $3 support and resistance. By the way, let me take a look at the market structure of MSTR. Let me see. Micro tragedy. I say micro tragedy. Take a look. Another demand versus supply disaster, guys. The demand is buyers are nowhere to be found, and the supply is going higher and higher and higher and above average. Not a good looking chart, at least in minor time frames for micro tragedy, and the demand and the supply doesn't look good at all as well. So we might be about to see lower prices over here. This stock looks like a short, guys, to be honest, below $340. $3. They posted earnings today, I think, right? Let me see, $3. Wow, 51 minutes in, guys. It's been a long. Ooh, oh, no. Take a look at this, bro. Jesus. Give me the Elmo with the fire, guys. Give me the atomic bomb. Give me the nuclear bomb and the end of life. Take a look at $3. Jesus Christ. This thing collapsed. Today, $18. Guys, wait. You need to wait. This is a stock that has a very big institutional participation. Whenever you see a stock that has an important institutional participation falling off a cliff like this, you need to wait for at least 2 trading sessions. You need to let the dust settles, and you need to let institutions to figure out what the heck they are going to be doing with the stock of that company. So since this is a stock that is heavily owned by institutions, you cannot touch this thing until Tuesday or, I don't know, maybe Wednesday. I don't trade downtrends for the most part. I mean, I gotta be honest with you. I took a day trade on Dick's Sporting Goods this week, which was the exception to the rule because I don't like trading downtrends. This short is absolutely broken from a technical standpoint. So I don't know. Let me pull up a major time frame over here. I don't know. Can we see $120 coming up? Yeah, it's possible. This is a previous resistance back from April of 2021. I wouldn't be guessing the bottom over here, so just wait for buyers to show up and show some strength, and don't try to guess the bottom here. It isn't worth it. So just let the dust settles, and I don't know, maybe we see $3 bouncing back up and recapturing $129, which is a previous support back from early June, and that could be a positive signal in order to try to buy the dip over here. Again, I don't like trading downtrends, so I am not going to be a participant in this trade anytime soon. So just let's wait to see what happens with $3. I use the RSI and Bollinger Bands and watch for the patterns forming, says Dustin. I don't use the RSI that much. I don't use the Bollinger Bands either. I know that those are very useful indicators. And in the case of the RSI, Dustin, please do me a favor, or rather do yourself a favor. Do not rely on the RSI, the Relative Strength Index. A lot of people love the words overbought and oversold. That's bullshit. There's no way, there's no an exact science for us to know when a stock is either oversold or overbought. So I use it. You guys can see it over here. This is the Relative Strength Index. And yes, if I happen to see a very low reading when it comes to the RSI, I'm kind of expecting a bounce, but I don't feel 100% confident, just like some other people do, that a stock is going to bounce back up because the RSI is very low. I don't know if we have a reading of 10 or 5 points or something like that. So don't trust. Take a look. I mean, let's take for instance data tree, guys. Take a look at the RSI on the 4-hour chart. 18 points, extremely low. So a lot of people would say, "Oh, but dollar tree is about to bounce back up because it is oversold." You watch. The fact that the RSI is very low doesn't necessarily imply that any given stock is about to bounce back up. And on the flip side, if the RSI is very elevated, some people say, "Yeah, but this stock is overbought." Bullshit. I have seen a lot of stocks, guys, going way higher with a very high and elevated RSI. And I have lost money shorting based on that assumption. So I use the RSI, which is an indicator that I pay attention to, but don't pay much attention to it. Disney, another disaster, guys. Take a look at these guys. I think that Disney hit a price that comes back from 2014. Let me see. I mean, we can argue that Disney traded at $82 during the COVID-19 crash that was back in 2020. But other than that bottom that was made back on March of 2020, today Disney hit a level, guys, that we haven't seen since 2016. Let me double check. 2014. Unbelievable. So in this case, guys, and I already told you that I don't trade downtrends. You need to pay attention to the net aggregate opinion of the markets. And I know that maybe some of you guys like to invest at a long term, and maybe many of you guys see this chart and you guys say what most people say: "Yeah, but Disney is Disney. This is a great company. And if I invest in Disney right now, if I buy the dip here, I am going to be doing pretty well 5 years out." The net aggregate opinion of the market is sending a message. Something is wrong here. So something doesn't add up in the case of Disney. And that implies that this stock can keep going lower. That's why I don't buy downtrends. I listen to the charts. I listen to what the charts tell me. The chart of Disney is telling me there is something wrong going on over here. Stay away. Sellers are in control. So if I know that sellers are in control, why do I need to fight against those who are in control of a technical chart? This is a no touch until buyers can show some strength. What could be a situation in which buyers would be showing strength? Well, at least, the very least, we need the bulls of Disney to be able to burst above this downward sloping 100-day moving average, $92-ish, which is also a previous resistance back from early August. This is a no touch. Just stay away from Disney. By the way, let me reconcile the market structure of Disney with the technical chart. Let me see. Walt Disney Company. Let me take another sip of Sprite here. I'm tired, guys. Maybe the market structure sends some sort of encouraging sign or signal. Yeah, kind of. So it looks like we could be potentially seeing sellers exhaustion over here, guys. Take a look at the supply sellers. The supply is collapsing, and the demand is starting to rise little by little. So we might be about to see some sort of sellers exhaustion type of situation over here. But I'm not going to. I don't want to guess the bottom here, guys. I need buyers to show some strength by at least taking out or bursting above a major moving average, such as the 100-day over here. I totally agree. There you go. We have Palantir, the messy of artificial intelligence. Fuck the knife, guys. Unbelievable. What a stock pumper, guys. Unbelievable. This is the Messi of artificial intelligence. Take a look at what happened ever since the pumper of the knives stated that Palantir was the Messi of artificial intelligence. The stock has gone down 32%. Thank you very much, Mr. The Knives. Palantir still in an uptrend in major time frames. We have an upward sloping 200-day moving average, upward sloping 100-day moving average. Ain't no touch, guys, below this 5-day moving average. Downward sloping, by the way, 5-day moving average. Let buyers show strength. And mind you, yes, Palantir could be bouncing back up from this 100-day moving average from $13.30 each. Yeah, that's pretty much possible. On top of that, $13.20 happens to coincide with a previous resistance back from mid-May. But show me the money, buyers. Buyers, show me interest in the stock of this company by bursting above $14.60. And if that were the case, we have another gap up to $16. So from, let's say that we take this trade the way that I am describing it over here, from $14-ish up to $16.20, this could be a 10% profit trade. But buyers need to step in over here. Let me take a look at the market structure of Palantir. Let me see. And I am going to wrap it up. Take a look at the market structure, guys. Terrible. Buyers are nowhere to be found. Remember, the demand is on top and the supply is at the bottom. Where are the buyers? Take a look at the demand, guys. This blue shaded region. They are gone. They left. The knife sold at the top. He pumped the stock and he sold at the top most likely. Take a look. The demand collapsed. The supply is also decreasing, but it is way above the demand. So maybe Palantir has an appointment with lower prices, $13.20, or maybe a visit down to this 100-week moving average, $12 over here, which is also a previous support back from late May. There you go, guys. So tomorrow we are going to have fun. Mark my words. I am going to be, per usual, letting you guys know what is going on throughout the trading session. Remember, Powell comes out at 10 a.m., 5 a.m., I think. So don't do anything. Stay away from trading until Powell comes out. Again, I'm leaning towards bullish into the Jackson Hole meeting tomorrow. I could be mistaken because Powell could say something that the markets don't like. And if that is the case, we only need the charts in order to know what we have to do. So thank you very much, guys, for coming over. Remember, I am going to be releasing this video on my YouTube channel, the Bilingual Stock Market channel. So your comments don't transcend into the final video. So if you don't mind going over there and hitting the like button and dropping a comment, that is going to be very much appreciated. So thank you very much, guys, and see you on Discord. Enjoy the rest of your day. Bye-bye. Take care. Bye, my boys and girls. Take care. Bye-bye. 1 hour. Jesus Christ, I'm tired. I need a beer. I cannot have a beer. Which is sad. Bye.